people are constantly hitting us up with accounting, bookkeeping, should I incorporate if I'm a real estate investor type of questions. We thought we'd bring on Abdul and Kyle. And so we're going to jump into just a handful of different topics here. And then we're also going to get into the classic question that everyone asks, should I incorporate as a real estate investor? So we're going to explore that. And then finally, we're also going to touch upon flipping. These are usually some of the most popular topics that we seem to come across.
They are now not having any exemptions on assignments on the sale of property. It isn't in effect yet. It has to still pass through the House. So I think it's still going to take a while before this passes through, but look forward to paying some more HST on your assignments.
Yeah, if you're trying to scale, if you're trying to be the next Matt McKeever, the next like Casey Wong, right? I mean, with their 300 units under their belt, then yeah, incorporating is probably the best bet there.
What is up, YouTube, Canadian real estate channel? Matt McKeever here. It's been a while since we last chatted. Hope you guys are all doing well. I'm doing well, as you can see up at the Citadel. This is the property I'm living now. But anyways, just thought it'd be fun to quickly check in with you guys, jump on a video. I've got a really exciting episode, I think, planned for you guys. People are constantly hitting us up with accounting, bookkeeping, should I incorporate if I'm a real estate investor type of questions. So we seem to always need to do updates around this, even though we've actually shot a ton of videos on this subject matter in the past. You guys seem to think that the moment the video's out, that it's stale-dated, so we thought we'd do another update video today. And yeah, let's just jump into it. So I'm going to be introducing you guys to two young CPAs that recently worked for me as I was building my real estate empire. And now they're actually launching a spin-off business where they're going to be providing bookkeeping, accounting, and all kind of the boring financial services that you guys usually seem to want to avoid or put off. You've got that shoebox full of receipts, probably from 2021, that you still haven't filed yet. So we thought we'd bring on Abdul and Kyle and just kind of hang out, chat about accounting, and try and help you guys out as you're looking to file your taxes, whether it's for the 2021 season or maybe you had a bad 2021 season filing and you're hoping to get in front of 2022. Hey, Kyle. Hey, Abdul. How are you guys doing?
Doing great. Ready to get some content going here.
Hell yeah. Awesome. Yeah, I'm doing great too. I'm Abdul, by the way.
I'm Kyle.
Awesome, guys. So I kind of already gave them a quick little introduction about our backgrounds, but if you guys just want to provide a little bit more about each of yourselves.
Yeah, I'm from the small town just outside of London, Strathroy, Ontario. I went to Laurier University and then worked at Davis Martindale, which is a small firm in London where I got my CPA.
And yeah, as I said, I'm Abdul. I'm from, I actually came to London when I was 5 years old. I'm from the Middle East originally. I worked at a firm here called Deloitte for a few years until I got to a senior accountant / assistant manager position, and then decided to join Matt on his ventures and his different businesses.
Awesome. Appreciate that, guys. And so we're going to jump into just a handful of different topics here. We've got some little updated news around assignment deals. And I know Kyle's very familiar with that because he's worked for a wholesaling business for a year and a half or 2 years now. Time flies. And then we're also going to get into the classic question that everyone asks, should I incorporate as a real estate investor? So we're going to explore that. And then finally, we're also going to touch upon flipping. These are usually some of the most popular topics that we seem to come across, whether it's just comments on YouTube, whether it's as accountants, because reminder, I also am a CPA, so people seem to always be hitting me up with accounting questions. I thought rather than me trying to just avoid it in the DMs, we'd actually jump on a live stream here and record some perspectives because, again, so many people don't know what they don't know. And I think that's one of the keys when it comes to making sure you've got an expert in your corner as a real estate investor, right? Whether we're talking about lawyers, which, we've got Carson Law on the channel on a regular basis, whether we're talking about having like wholesalers finding you the deals, or whether you decide to actually find deals yourself, having a great realtor on your team like Jeff Weibel, or also having great accountants. So Kyle and Abdul, let's just kind of jump into it and discuss what's going on in the world of assignments these days.
Yeah, so previously we've been kind of skirting the HST exemptions on residential assignments because we viewed the seller of the home and then the assignee of that assignment paperwork as strictly residential, which put the exemption in that there is no HST on the assignment. When you dealt with commercial properties, there always was HST there before, and there's no changes going to commercial. But looking at residential now, they are now not having any exemptions on assignments on the sale of property. It isn't in effect yet. It has to still pass through the House. They're still delayed with new governing laws that they had last year. So I think it's still going to take a while before this passes through, but look forward to paying some more HST on your assignments.
Yeah, and I personally suspect, and I'd love to hear your guys' opinions, but while this definitely will impact, a wholesaler or real estate investor that's doing the occasional assignment, I personally think that one of the reasons the government really decided to go in this direction was actually to try and penalize people flipping new build construction contracts, right? So I think that was really the segment they're targeting, but there are unintended consequences when the government looks at implementing these things. And just to circle back to what Kyle was chatting about there in regards to why in the past HST wasn't viewed as applicable on, residential resale homes. Well, again, unless and maybe we'll even dive into this right now because it covers a little bit in regards to flipping real estate. But when it comes to flipping real estate, there's always the question of whether HST is applicable. And it really comes down to, how much construction are you doing on these properties that you're fixing up, right, guys?
Yeah, absolutely. If the reason they don't put HST mainly is that most homeowners are living in that house themselves and they are selling it potentially for a profit later just because the market's changed, and they don't want to penalize homeowners for owning their home. They want to make sure that if there is an addition in value to that home, then there has to be some sort of HST applicability because every other product or service that you're adding value to is having HST on it already.
Yeah, I appreciate that perspective. And so getting a little bit or circling back now to the assignments, essentially, what are the real implications here from a practical standpoint if this does go through and we start seeing HST charged on every type of assignment contract? My natural assumption, and let me know your guys' thoughts here, is that assignment fees probably aren't going to go up, but what we're going to see is margin on assignment fees go down.
Yeah, you'll likely see still within the contract, it'll say whether or not HST is included or excluded. And I think the average wholesaler can't justify going to the end consumer and saying it's excluded and adding that 13% on. What they're going to likely do is absorb that 13% and remit that off later on. But this also gives the opportunity for that wholesaler to remit HST on their expenses that they had, on flyers, on other things that they're putting in that they originally couldn't, because they didn't have an offsetting HST revenue on there too. So it's going to dip into their margins, but it might not dip in as much as they originally thought.
Awesome. Appreciate that. And now let's get into everyone's favorite question, because it's a question every CPA always gets. Should I incorporate as a real estate investor? And while, again, the natural answer is going to be it's situational. It really depends. The devil's in the details. Let's talk high level and give some general guidance for people, even though it really is important that before you make the final decision on this stuff, guys, you need to sit down with an expert like Abdul or Kyle, or any other sort of trusted CPA or accounting professional, but make sure they really understand the intricate details behind your personal situation, not just today, but also where you're planning to grow or build your business into tomorrow, because that's also a big factor. A lot of people, day one, when you start off, let's say you don't even own a piece of real estate yet, I kind of think it's silly to go and incorporate just for the sake of it, because, hey, you don't even know if you're going to like being a real estate investor. But let's assume someone's done a deal or two already. Where do your guys' brains go naturally in thinking, should I incorporate or not as a real estate investor?
Yeah, so maybe I can chime in here. Really, like one of the major benefits of incorporating is just getting that organization piece, right? So just making sure that you're tracking everything properly and all of that, and because it's not entirely just a tax decision, right? You do get some benefits from a tax perspective there, tax deferral mainly, so not really paying less taxes overall, but paying less taxes now, right? So that definitely is a major benefit. That way you can take that additional tax savings that you have for now, and reinvesting it in your business to scale it up, or doing whatever you want. If you want to take the wife out on a night on the town, you could do that. But I mean, really, that's the tax side of it. But the organization piece is huge too. Just getting all your ducks in a row there, making sure everything is separated off properly between each property. And there's also other benefits. I mean, like reducing liability when it comes to if there's any lawsuits or anything like that. You can definitely limited liability corporations are a thing. They do exist, right, for that specific purpose. So if somebody comes to me asking, I mean, should I incorporate, which I've definitely gotten that question many times before, it's entirely, I mean, I don't want to sound like what you just said, Matt. It does depend on the situation, right? I mean, what are their goals? What are they trying to do? If they're only trying to get like a couple properties and like that's just their ultimate goal, I mean, is it really necessary to pay all the legal fees to get a corporation set up? Now you got to pay annually for a T2 filing, and just all these soft costs. Is that really necessary? Probably not if it's just a couple properties. But yeah, if you're trying to scale, if you're trying to be the next Matt McKeever, the next I don't know, like say another like Casey Wong, right? I mean, with their 300 units under their belt, I mean, then yeah, incorporating is probably the best bet there. I don't know, Kyle, if you have anything to add on to that.
Yeah, and when it goes into the situational side of things, I think it's better to be aware of the things you have to bring to your accountant. So what are your future plans? Do you need to take out $100,000 to live to make sure that maybe your primary residence that you're living in, you need to make sure you can make that mortgage, and you have to buy groceries. So some of the tax deferrals are ultimately going to be reduced if you start taking out more salary. And it also depends on whether or not you're flipping or you're doing a rental business. Now, in the rental business, you're going to pay a higher tax rate, but a portion of that is refundable if you pay out dividends. And if you wanted to pay yourself out exclusively at a salary, then you're missing out on a potential tax saving because your corporation is going to pay more tax and you don't get the tax break in the end. Now, another thing is to consider is your exit strategy. So say when you're 75 and you've decided that the real estate game is just done for you, selling all of those properties might not be your best idea, because although you get the 50% capital gains taxable portion of that, you miss out on the opportunity of selling a portfolio of corporations that could give yourself the lifetime capital gain exemption, which I think is around 875,000, but they do account inflation every year. So when you're 75, it's definitely going to be more than what it currently is. Or if the regulations go the other way, you may never see it again. But currently it's trending towards keeping your capital gain exemption, because the Canadian government wants you to start businesses. They want you to make sure the economy is going there. And then from like the legal side of things, having a corporation just gives you that much more degree of separation between your personal items and what could happen detrimentally in those situations, lawsuits or anything along those lines. So having the corporation does save you liability wise, but there are things like fees for corporations, if you go outside the lines, are significantly more than personal. So if a corporation delivers an N12, which is someone moving into the house, therefore the tenants have to move out, and they sell that house within the year, it's a $250,000 fine, versus having it personally, it's only a $50,000 fine. So they do view those fees as corporations, so a lot higher, because the corporation's ability to pay is likely higher. So those are all the considerations you need to make sure that you're always have your ducks in a row from a legal liability wise, because no one likes to get a lawsuit against themselves or the corporation, because you're reducing your potential earnings there as well.
Yeah, I appreciate that perspective. And I just really want to hit home that it is important to understand that you need to take into consideration all the different factors when it comes to incorporating. As the guys were just laying out for us, it's not necessarily just a tax consideration, as in, well, where am I going to pay the less taxes? Because there can be additional costs associated, as Abdul was kind of going through. A few other additional costs that sometimes people forget or overlook is oftentimes you're going to end up paying slightly more for insurance in a corporation versus as a personal individual when it comes to insuring like your residential rental real estate. In addition, banks will often charge you a bit more as well. So you may end up having to pay a slightly higher interest rate than you might get personally, right? Usually the most favorable interest rates you're going to see is going to be for personal residential real estate, right? So those are the prices that most people flex when they renew their mortgage for their personal residence or whatever the case is. That's also the rate that you often see posted at the banks when they're talking about, how affordable real estate or mortgages or their interest rates are these days. So definitely important to keep that in consideration. And at the end of the day, while it's not a satisfying answer for the average real estate investor that just wants a silver bullet, a yes, no, it really is going to come down to your situation, mapping out what are the consequences, right, of deciding to incorporate and what are the benefits of deciding to incorporate. And as you guys kind of lay out all the different puzzle pieces, then that's the time you can actually really make the decision on what's right for your personal individual situation. I guess before we move on from incorporating, any other points you guys wanted to hit on here?
I think we kind of did mention another added benefit would be just the whole like family trust, owning the corporation side of things. If having a family trust is something that interests you, or you think that's something that that you will be doing, if you want to keep your real estate portfolio even past yourself, and kind of carry that on to shift that down to your kids or next of kin, whoever it is. That's definitely an added benefit there. Again, in terms of the organization of things, right? That way it doesn't have to go through the whole like estate process and all of that. I used to work at a bank, and my wife also worked at a bank, and we know exactly how much of a headache the whole estate process can be. So opening a trust and having rolling the corporations into that trust is definitely a great benefit if you do want to continue that business past yourself, right?
Yeah, it definitely is a lot more difficult to pass down your real estate to the next generation if it's all just held personally. There's definitely potential tax consequences there, again, depending upon exactly what the real estate is. Sometimes there's exemption for like qualified farm property and things like that. But again, it's just so important. Just for anyone, I'm going to go off on a little tangent here, but for anyone that knows my political perspective, I think the tax code is complete garbage. I think it's insane, the fact that we've got this giant document that almost no single individual can fully comprehend. But hey, that's the reality of the situation we find ourselves in. And you do yourself a disservice as a investor, particularly if you consider yourself a sophisticated investor or you aspire to be in one, if you don't either get into the details and understand it, or get someone on your team that's going to be able to help you navigate and make sure you're setting yourself up for success in the long term. Switching gears here, let's get into talking about flipping a bit. And I know right before we started recording this, we were chatting about all kinds of different flipping considerations. So let's just kind of do a scatter shot and cover a few things. So let's talk about, the potential of if flipping's your main business, what sort of consequences are there. Let's also talk about HST when it comes to flipping. So which one do you guys want to jump into first?
Yeah, we can talk about just the different taxation on the active business of flipping. Typically, a house is something that is very passive in nature. It's a capital asset, and you want to gain income from it. Versus when you start flipping houses, you're actually putting effort and work into making this house a better condition and saleable value. And if you're putting 50% of your revenue is coming from flipping that, it is considered active business. And you won't get that 50% capital gain exemption on that property sale, but you have to include that in your active business. And as you get going, you're not going to have a large amount of profit from that, which means that you can get the small business deduction. At least in Ontario, it's going to be 13.5%. If you go beyond that threshold, it's going to be at the 26.5% versus the regular capital gain taxation on it.
Awesome. And then do you guys want to explore HST when it comes to flipping?
Yeah, HST is applicable as long as you're adding a large amount of value to the home. So say you bought a house for $300,000 and you're putting a lot of work into it, and I think it's above 50% of additional value within that property, you're now going to be applicable for HST when selling that property. So it's similar to as though you are selling the house on the original.
Yeah, the idea is like if you're building new, right? Or
Mm-hmm.
at least that's the way it was explained to me in the past, is that, the concept is, are you essentially building a whole new house here? Because if you built a whole new house, HST would absolutely be applicable. Again, there can be certain exemptions or reductions if it's your personal residence, yada yada yada.
Yeah.
But we'll leave that for another YouTube video. But the idea here is there's significant consequences for us as real estate investors if we're completely gutting a house and then our plan is to flip it. So again, this is where just having a accountant, someone in your corner that understands these details is so important, because that can really have significant consequences, right? Just breaking this down for, why should I care as Joe Blow, the flipper? Well, understand that if it's decided that you're actually in the business of flipping houses rather than maybe you incidentally or accidentally flipped one or two houses, well, if your margin was 20% on the house, all of a sudden, if you have to incur HST now and you didn't charge HST to the original or to the new buyer of the property you're selling, well, hey, your margin just went from 20% to 7%. All of a sudden, now it feels like, we're on the head of a thimble here, or head of a needle, I guess is the saying, in regards to the risk of us potentially falling into not profiting on the deal versus profiting.
And to go with this year, obviously seeing a decrease in housing prices over the last few months, when you're doing a flipping, you're considering those houses almost as inventory. And the general aspect of inventory is you have to cost it at cost, which is the amounts that you put into to get it to the current point, or the net realizable value. So say you bought a house for $400,000 and you put $50,000 worth of value, your cost would have been $50,000. But if you can only sell that house for, say, $420,000, you actually have to recognize that loss the moment you realize that there is a dip and you were going to make that loss. So in this current year, you could be reducing your potential tax outlay if you are seeing these losses come through.
Appreciate that context. And so at the start of the show, we mentioned how you guys are launching a new business, and I think it'd be great just to kind of explore exactly what that includes. So my understanding, and again, I'll give you guys a chance to let me know if I'm wrong here, is you're essentially launching like fractional accounting, or even more specifically, fractional like controllership. And just a reminder, guys, essentially Abdul and Kyle were both like controllers for different businesses I've had in the past. So Abdul was on the social media business, as well as the event business and things of that nature. There's a few businesses there. And then Kyle was on the actual wholesaling business. And since I left the wholesaling business, you guys have also gone to flipping real estate as well. So these guys have a pretty wide breadth of experience when it comes to Canadian real estate investors and how their businesses are set up in the day-to-day operations. But for a lot of newer investors or people that are just currently scaling, the idea of like having a fractional controller might not even understand what we really mean there. So first of all, it's the service that Mike Brosshart really needs, but yet hasn't gotten. But those of you that follow him on Instagram and social media, you've likely seen every like April 20th to April 30th, Mike just stressing out because he's got receipts everywhere. And literally he takes over his entire house with different piles of receipts and stuff like that. And I've been there, done that as a CPA as well. It's not good. You're going to stress yourself out. And I think the biggest cost there is just the bandwidth cost, right? That people distract themselves and build this into a much bigger challenge than it needs to be, because one, they don't plan in advance. They're being very reactive when it comes to their accounting and tax filings rather than trying to be proactive. Where if you've got a controller, if you've got an accounting manager, if you've got someone that's making sure that you're staying organized month to month or quarter to quarter, rather than just panic filing at the end of the time period you're allowed, so say April 30th, that's where a fractional controller really comes into play. But I guess, how would you guys explain fractional controllership or the services you're currently providing?
Yeah, I mean, just a very good breakdown of it is pretty much everything your accountant does for you, but we do it a lot more meticulously and throughout the year. So as to like what you said, Matt, when it comes tax time, although that's not like our like the main focus, it definitely is a focus of ours. But yeah, when it comes to tax time, you're not just, going around, trying to find any random receipts. Oh, maybe I can write this expense off or something, right? Just going through that shoebox of everything and trying to even build estimates of expenses or income and all that.
And that's a big one, right? Is estimating your tax requirements at the end of the year. Lots of investors just focus on, I'm going to make as much money as possible and we'll figure it out next year in regards to taxes. And especially when you're looking at scaling a business, trying to retain as much capital as possible so that you can continue to grow or compound your growth is so critical, especially at the start, when you're just when you're going from that first few properties to the first few dozen units or properties, that it's just so critical. I've seen so many investors set themselves up for failure by just not planning or not getting in touch with an expert that can help them plan.
Yeah, and to go along with that, it's definitely a general business partner on your side. We want to make sure that you do well in your business. So everyone says data is the next big thing to make sure you know what's going on in the future. And as you get years of accounting data, we can look at, say, okay, you know what? Last May, we had a lot of expenses coming up because this was our prime time of the year. Well, we should know that in the months prior that you're going to have to get some reserves up to make sure that next May you're not having any issues. But if you don't do everything on a monthly basis or a quarterly basis at that, you don't know what you're getting into or sort of the possible benefits you could have got with the context at that time. Because we always want to make sure that you're allocating expenses and capital purchases properly. And if you're trying to do that all at the last minute on June 30th or technically April 30th for the payment time, you're not going to get the true context and make good, rational decisions on that. It's also stuff like financing that if you only have 2 years ago's tax return, they're not going to be able to get a good understanding of where your business is at this current moment. And you don't understand whether or not you can take on a potential another mortgage, say a construction project goes a little bit longer than you thought. And just getting the general analysis of the market of hey, we've been seeing really good margins this year, and then comparing it quarter over quarter as well.
Yeah. And honestly, I mean, just to sum it all up in a list, which I do have handy here. I mean, really what it is that we offer is daily bookkeeping, generating monthly financials, annual income tax filings. So T1s, T2s, so both personal and corporate, quarterly HST filings. It usually is quarterly with businesses. If you need payroll processing, if you have a big team, that's something that, again, we can negotiate on. We can definitely that's a service we can offer. As Kyle said, general finance or accounting advice as requested. So throughout the year, if you're making a big pivot or something in your business, or there's a big event or a big transaction, again, we can provide our advice on that. Let's say a business acquisition. That's not super easy to just do. Let me just go buy this business with my corporation right now. Well, there's a lot of different ways you can structure that, both from a tax perspective and from an organizational perspective. So I mean, just advice on that front. And also, if it was mentioned before, if you don't have your previous year's financials filed or created, I mean, we can definitely help you with that. So cleaning up your accounting software if you use QuickBooks or anything else, catching up on the books and making sure everything is all up to date and done properly, right?
Yeah. And a lot of the tax saving things we can't change after the fact. If you've paid yourself out a $70,000 salary when you really only meant to do $55,000, you want to do the rest in dividends, you can't really make that change on the fly and after the fact. Those filings usually have already been reported on January 30th for their T4s, and going back and making that change is very difficult. So having up-to-date records to the day is so much more important if you want to actually capitalize on any tax savings.
Yeah, and to just build on that too, I mean, that also touches on giving advice about, okay, how much can you actually pay yourself and what's the best way to pay yourself, right? So the whole with accounting is an age-old thing about, okay, do I take, as a business owner, do I take out salary or do I take out dividends, or do I do a mix of both, right? And what's the most optimal kind of mix if it is one? So so many different benefits, really, many different services that we are offering here.
Awesome. Yeah, I appreciate you guys sharing that. And so for just people sitting at home, again, one thing I want to highlight is you don't have to have an accountant. You don't have to have a CPA when you're looking at starting your real estate business or scaling it. But you really are doing yourself a disservice, or at least future you, because I don't think that that's the area you want to become an expert on, right? So as a real estate investor, we're business owners, and we need to really focus on where is our area of expertise going to be. If you want to be the expert at accounting when it comes to real estate investing, great on you. But I think it will slow you down in regards to actually building and scaling your business. And just honestly, for most newer investors, figuring out your business model and how to profit as real estate investors is a big enough challenge, let alone also learning how to navigate the tax code inside and out. And I always think of, there's a great book called Bluefish written by Steve Sims, I think the author's name is. And in that book, one of the things he talks about is when he was hiring his accountant. And he was like, him and Han, if I remember correctly, he had an accountant. He didn't really love him. And he was meeting a new accountant. And his wife asked him a really simple question. Well, do you like him? Would you chug a beer with him at the pub? And the reason this is so important isn't because you need to get drunk with your accountant, but it's how comfortable are you with them, right? Are you willing to actually like ask them questions? Are you willing to embarrass yourself? Are you willing to be like, hey, I think I kind of screwed up and this is the situation? That honestly is so powerful versus like the exact opposite, in my opinion, is oftentimes businesses like H&R Block, where you're literally just going to hand them a summary of things, or you're going to be like, here's my stuff. And they're going to do things, and then they're going to be like, hey, we filed your taxes and this is what it is, rather than working with you and being like, hey, is this right? Like, I'm surprised that you've got no renovation expenses this year. I thought you said that, you were doing a big renovation. So where's that? And it's like, oh shit, I didn't give you that $20,000 invoice from my contractor. Well, here it is, right? And that's where the relationship side of the accounting experience is so important if you really want to be a serious business person, in my opinion. So before we wrap this up, guys, where can people get in contact with you? I'm sure we'll share links in the video description down below, but what's the best way to get in contact?
So we actually just built out a website pretty recently. So I can kind of just do a quick screen share here and just quickly run through the website. Yeah, so this is it right here. So basically when you go to the home page, this is our landing page essentially, where you can just fill out the information here if you want to get in contact with us. So full name, email, phone, preferred method of communication, and then just a little bit of info about yourself and what exactly you are looking for. From then, if you click submit, you should we'll basically get that email and we'll reach out to you. I think we have a survey that gets emailed out. Is that right, Kyle? Yeah. So you can even give us more information about yourself and what you're looking for, as well as your business in that survey, so that we can tailor our services to you specifically. And then if you want to learn about us as well, you can hit the About Us section. There's our pretty faces right there, and CPA after our name, so we're legit. And a little bit of bios or LinkedIn. And if you want to know more about the services we offer, everything we discussed here, you can hit this section here. And just kind of scroll through it all. We have a nice little flip book here to kind of just go through some more information if you like. Some jokes in there too, just to let you know we have a personality. So that's the website there.
Yeah, and to go off of like everything here is that we want to make sure that you get what you want and not anything more, nothing less. So if you come to us and you say that you just want to do your T2 every year, you don't mind panicking at the last minute, we will do that for you. If you say you want everything involved, we will make sure that that happens into the best services possible. And to start with that, like if you go through the website and they give you that little survey, we just wanted to start to have a conversation. We want to know about you, about your business, so we can give you the best advice or the best service possible. So you can go through the website and there'll be a survey. Or if you say, screw that, I just want to get in contact with you guys, don't need any of this jargon, just email info@vulcanaccountingservices.ca and we'll get right back to you. And then we'll just set up a quick Zoom call and we'll go over everything that you want and the services we offer as well.
I don't think I'm speaking out of turn here. You guys can stop me if I'm wrong, but essentially what's also important is when it comes to lawyers or accountants, I know people are so afraid of being charged by the hour, but when they first start consulting with you and jump on that initial Zoom call, am I correct in assuming you're not going to bill them for that this is just an exploratory conversation?
Yes, it's free consultation, and our services are going to be on a monthly basis. If we have to spend extra time to get what you need done, we will do it. We're not worried about that.
Awesome. Well, appreciate it, guys. We'll throw a link to everything you talked about in the video description down below. And if you guys enjoyed this video, if you want to see either more of me or more accounting content on the Canadian Real Estate channel, let us know in that video description down below. I really appreciate the fact that Abdul and Kyle were willing to jump on this call and just kind of update us and give us a refresher in regards to everything related to accounting and Canadian real estate investing, because I don't think that subject matter is ever going to get old for our audience here. And again, appreciate you guys watching the video. I hope that you've been enjoying the content, even if it hasn't had a lot of Matt McKeever in it recently. Definitely think that we've got a great set of just like subject matter experts that are constantly coming on this channel. I'm very proud of what this channel has become. And yeah, otherwise, just hope you guys are doing well, and we'll see you in the next video. Thanks, guys.